Welcome in Saurabh Mukherjea, who is with us. He's founder of Marcellus Investments. Saurabh, great to have you on the program. Thanks very much. Good morning. It's been a while since we had you on the spot. So let me ask you to outline your views on where we stand as you see things. I think markets, of course, have how should I put it, done well over the last couple of years. Maybe entering a bit of a slow patch. Earnings, of course. Once in a while, you get into this slow patch as well, and I think that's where we are at. Where does that leave Marcellus and you in terms of your thinking on what's ahead? Saurabh.
I think the good news for India, right? The good news for India, I think, is that in the context of what's been a remarkable bull market over the last 5 years, large cap and specifically large cap quality, I think, is pretty reasonably valued. So the kind of things that we tend to like, e.g. HDFC Bank, is sensibly valued. And even though the economy has entered a cyclical downturn over the last 5-6 quarters, and even though earnings growth has slowed down to a crawl, I'm not that stressed about large cap quality valuations. Value investing stocks or cheaper stocks with questionable fundamentals have had a tremendous 5 years. And as the economy loses steam, typically the market tends to rotate back to quality. I think that piece gives me a lot of hope that our style of investing is gradually coming back again into vogue. This year so far has been good for Marcellus. Where I worry about the Indian market is small and mid cap. I think the valuations make no sense to me. Why the small cap index has doubled in 3 years without any fundamental support makes no sense. And what really worries me is the intensity and strength of flows into small and mid cap AUMs. The amount of money they're taking in, the lack of earnings growth, the giddiness of valuation. I think that patch of the Indian market worries me, not just as a market participant. I also have macroeconomic concerns. I think middle class India is putting too much money in small and mid caps. And if there is a big correction there, that will have macro implications for the country as well.
Saurabh, could you just lay out what the Marcellus flagship kind of portfolio looks like right now? You mentioned HDFC Bank briefly. What else makes up? I mean,
large positions. So much the same actually, Prashant. We don't change the large positions that much. So HDFC Bank for many years has been a large position. Obviously, when it flatlined for 3 years, we suffered. But then it's a high class institution. As asset quality tanks in India, HDFC Bank is obviously coming to the fore. Divi's Lab has been for now, I think, nearly 7-8 years a big position. It did well during COVID, then pulled back in the year after COVID. It's done well again, remains a large position. Trend 3 years ago, we built it into a large position, remains a large position. We're seeing the slowdown in consumption. Obviously, Trend is taking its share of pain from the consumption slowdown. I think a previous speaker, Lal Bhaiji, was also speaking about it. Trend is also seeing its share of consumption slowdown. But I think structurally, we see Trend as far better placed as most other apparel retailers in our country. Asian Paints, for many years, a large position, remains a large position. We remain reasonably sanguine about the Birla piece. I know the Birla empire is mighty and they're putting in a lot of money and effort, but I don't see the competitive intensity playing out in the marketplace as much as perhaps many people watching this show do. Asian Paints' bigger challenge will be the consumption slowdown, like everybody else. That company's volume growth is also muted because of the consumption slowdown. And then moving on beyond these names, companies that we've built more larger positions in more recent years, say Eicher Motors. 2 years ago, we built that, remains a healthy position for us. Pidilite, long-standing Marcellus favorite. So it's much the same. New entrants, I would say Eicher Motors at the newer end. And there are some mid-caps, small and mid-caps, where we are beginning to nibble. But I have to confess, in small and mid-caps, the valuations are so punchy that we worry about building large positions just yet.
Hi, Saurabh. Good to have you on the show after a while. You want to name a few of them, though? I've gone through the large caps, the traditional favorites, HDFC Bank, Asian Paints. Eicher Motors is something that you've added. Divi's Laboratory as well. You've spoken about it in the past. From the mid and small caps, one name if you could share with us?
So look, I mean, the overall pharma space, right? I believe the pharma space will do well. It's not just Divi's and outsourcing. That obviously is a part. I think outsourcing will come to India. I think the America-India trade deal will fructify. I'm not in the camp which says America will hammer India with pharma tariffs. It makes no logical sense for them to do so. So as the pharma space burgeons, as both outsourced manufacturing and Indian formulation makers do reasonably well, there'll be a whole bunch of ancillaries who will do well on the back of that, and that's where we're focusing, Nigel. That's where we're focusing a big part of our research attention. And to that end, I think 2 years ago we built a small position in Aquitas. This is a supplier of raw materials, supplier of intermediates to firms like Divi's. And I think as Indian APIs gain market share in the global context, suppliers to Indian APIs, firms like Aquitas should benefit. I know it's expensive. It was reasonably inexpensive when we bought it 2.5 years ago, just soon after its IPO, but it's become eye-wateringly expensive. But that being said, many of the intermediates players in India are growing their business at 30-40%, which is what's leading the whole world to say that shouldn't we be loading up on these type of specialty chemical companies.
Which is the company? Sorry, missed that. The company's name, Saurabh, just to clear the air?
So this is a company that changed its name. It used to be called something else. It's now called ACUITAS. ACUITAS.
Okay. Saurabh, hi. It's almost like deja vu speaking to you after so long, and yet some of your top holdings still remain, right? So you've kept the faith.
Same old. Yeah.
Absolutely, the Pidilites of the world, HDFC Bank, Divi's. This could be a conversation, I think, 3 years back as well. But, I want to get your thoughts in a little more on the consumer piece, because there's a lot of disruption that's going on. Now, while you've kept the faith on trend, the market's been, volatile, saying they're not growing at 50% and now it's 20%. At the same time, what are you thinking about the platform guys? Because they're showing profitability, they're showing the burn, reducing, and consumption patterns have been changing. So just tell us a little more. Like, you used to have Page Industries. It was a big conviction stock for you guys. I don't know if you paired off that. What about QSR? Tell us what else you're liking in consumption, and where have you taken profits or, paired positions?
So look, I think let's start with the platform piece, right? So on the platform side of things, InfoEdge is how we chose 3 years ago. We chose to build a position in InfoEdge, and because InfoEdge holds stakes in Zomato, Blinkit, or now it's called Eternal, right? InfoEdge holds a large stake in Eternal. We are able to get exposure to that. I'm not so sure that directly we'll be investing in these platforms, because it sort of runs contrary to the house style of focusing on well-established players with strong cash flows. But we can see that somebody, maybe two companies, will build multi-sector QCom platforms. At this juncture, via our InfoEdge stake, we think Eternal seems to be the front runner, but it could be Eternal and one more. We don't quite have the skills to go and load up on the platforms directly. With regards to Page, we exited around 3 years ago now. I'm glad to see the company is doing well in the recent quarters. We exited because in the post-COVID, during COVID, for obvious reasons, we all sat at home and bought plenty of leisure wear and shorts and t-shirts and so on. And Page had a terrific run. In the post-COVID aftermath, as the excessive spend on Page's products tapered off, and there was some comparative new entry, Page suffered. And 3 years ago, I think we exited the position. It's doing well. We'll keep tabs on it, but at the moment there is no Page in the Marcellus portfolio.
Okay,
Aquitas, I think Nigel was asking. So it used to be called Ami Organics. It's now called Aquitas. They changed their name recently, and that's why it might not be a familiar name. We built that position a couple of years ago, I was saying.
Okay, so Ami, that was to the earlier point to Nigel, that Ami Organics was the chemicals play that Marcellus liked, and now the name has changed to Aquitas. On the platform companies, Saurabh, while you're not playing them directly, I mean, you do still have InfoEdge, right? Anything else in consumption? Any new ideas that have managed to pass your filters?
No, nothing on consumption. Okay. My reading is we are heading for a consumption downturn. That's why I'm holding off both on talking up more consumption stocks, and Marcellus genuinely is holding off building new consumption positions. So the RBI data is very, very clear. Net household financial savings is at a 50-year low, right? Savings in India running at very low levels. I think Indian household savings will rise over the next 2 to 3 years. As that does so, I think there will be pressure on consumption. A, given punchy valuations, B, given impending pressure on consumption, we are holding off building more consumption names because we worry about that space. If you ask me, if anything, right, we will try to see, can we find more plays on private capex? I think the single best piece of news I've heard for many months was the not just the L&T results, but within the L&T results, the announcement that a big Indian company has given L&T a big BTG project, boiler turbine generator project. I think private capex will make a comeback over the next 2 to 3 years. And what we are trying to do is scope out where should we put money in private capex. I stress again, I'm talking about private capex, not government capex. Corporate India, for the first time in its history, has net cash. I think we will see a private capex a bull run over the next 2 to 3 years, and we're trying to figure out whereabouts in that we should position ourselves. I think the consumption piece, we are in a downturn on consumption. I expect it to continue for several quarters.
Okay, that I think that stock that Saurabh is talking about, it's Acutaas, ACUTAAS Chemicals.
That's right. Yeah. Thank you. Thanks, Prashant.
It's not ACQ. I think we should change that.
ACU. You got this name in the ticker, right? So it used
because
to be
that is, I think,
what changed their name.
A little bit of confusion there, but there you go. I think we have it now.
This space, I think, will do well. I think India, America, Pharma, specialty cans, Pharma API will be a central part of the deal. America is very, very keen to reduce dependence on China for API. As that happens, ancillary suppliers such as this, and there'll be many more ancillary suppliers such as this, should benefit because they will get a slice of global action via firms like Divi's Lab and Lotus Labs and so on.
Got it. A great conversation, Saurabh, and we'll chat again in greater detail on some of these themes. By the way, I liked how you said we don't have the skills to invest in such a nice way to. What is it? I think it was the quick commerce company. Surabhi, you asked, right?
Yeah, because they don't pass master.
Nice one. Thanks very much, Saurabh. Good to have you back.
Yeah, but that's an interesting pivot at Marcellus as well. Now they're looking at private sector capex. And speaking of